Hey, welcome. Good evening, guys. It is Thursday night, August 28th, in preparation for Friday, August the 29th, last trading day of August before we move into the last month of this third quarter. So crazy. We're almost done with the third quarter here. We're moving into the last month of the third quarter here. So, all right, we're continuing on with Viewpoints of the Commodity Trader by Roy Longstreet. Declining commodity markets. Declining markets means rising profits for an increasing number of successful traders who know that profits can be made on the short side of the commodity markets. This message is written to extol the merits of bear markets. My observation and experience leads me to the conclusion that it is possible to make as much profit on the short side of markets as on the long side, and probably with greater assurance. Declining markets are usually of the realizing kind of less often make, I'm sorry, declining markets are usually of the realizing kind and make le less and realizing kind and less often make big mistakes, by going far below their true economic value. After a market has made a mistake on the upside, it is not too difficult to recognize the mistake and to know how far down it must go to correct that mistake. It takes fuel to keep the bullish fires burning, but a market will fall of its own weight in the absence of bullish news. A bear has good company. Industry hedging is much more stable and certain than are the long positions of the speculators. Perhaps one of the more important reasons for trading a declining market is that sequence trades are possible. The opportunity to recoup is much more likely to occur if a trader loses on the short side. Market rallies that are false can be reinstated after a marked time stop. If the market rally is the beginning of a long rise, one can reverse his position when the evidence seems more certain that a sustained rise is in the cards. I like the short side of the market because there is less company. The mob is usually wrong. It is usually long. It is it is as easy to sell as it is to buy. One is performing the same service on the short side as on the long side. In either case, he is helping society by tempering the shock of abrupt change through accepting the risk as a speculator. The uninformed commodity trader would do well to learn how to trade declining markets. It is a step in the direction of becoming a successful professional. All right. Oh, I didn't turn the page for you there. All right. There you go. All right, over trading. The word this time is overtrading. I must confess that I have had much trouble. I don't know. Sorry, guys. I guess my brain's fried today. I'm going to start this over. The word this time is overtrading. I must confess that I have had much trouble with this phase of trading. What does it mean? Is it all bad? In nearly every book on the subject of speculation, you will find the admonition, do not overtrade. This is one of the few laws, absolute, that frustrate me. I am sure that it means different things to different traders. To one, it means an overextension of market position because of limited capital. To another, who has the capital, it may mean overextension of nerves. Many times, it means perilous of action because of the inability to think clearly. Evidence is strong that it is present when one must reduce one's position to be able to maintain another, or when one replaces fact with hope. We must agree that overtrading is bad by definition. Anything done in excess of one's capacity must be so classified. The difficulty arises when one tries to apply the rule. Each one should trade differently. Overtrading for one is not overtrading for another. One can lose all of his capital and come back again. It has happened all too often. Some learn what they can do only by a process of trial and error. The danger to avoid is loss of self-confidence, though, and I have that highlighted. The danger to avoid is your loss of self-confidence. Let me remind you, there are two things a successful speculator in commodities must have: capital and sleep. In practice, I strongly urge that you so act as to keep the mind clear and the judgment good. If you find it hard to sleep, then reduce your position some or all of it. A good general never risks all of his troops in the front lines at one time. He is always ready to take advantage of a breakthrough when it occurs. Be a good general. All right, that's it for tonight. Um, on that, we will pick that back up on Sunday night. Nope, sorry, Monday night. It's a holiday weekend, so we'll pick that out back up on Monday night for Tuesday's trading of next week. We have a short week next week. All right, wanted to go over my notes here on the daily chart here. We are on another 5-day extended run above this five period moving average, simple moving average, 5 SMA here. 1, 2, 3, 4, 5 closes above that. And we're getting kind of extended from that 5 period SMA. You see, anytime that we do get extended from it, get pretty extended, we touch it. We'll touch that 5 SMA. We got pretty extended on that one day. It only took us 2 days to come back to that and touch it. We touched it here. We touched it again today. So, we don't really want to get too extended off that. So it is interesting to watch that 5 SMA, especially when we get on extended runs and or we get fairly extended off of it. So you can see here we moved off of it, went closed 1, 2, 3, 4 days without touching it. Then it had to come back down here and touch it. Whereas on some of those other ones, you touch it here, 1, 2, touched it the next day. So it's just kind of an interesting study to watch that 5 SMA on the daily. Not the EMA, the simple moving average on that. And I do have that on my 14-40 minute chart. All right. So seriously, I kid you not, I have tomorrow as a sell day. I know I joked about it earlier, but I have tomorrow as a sell day. Let's take a glance here. I don't know if you can see this 2-period rate of change down here, but I'll see if I can zoom in here. But the 2-period rate of change, we barely went up on the 2-period rate of change, even though we just kind of had that. It was almost like the algos were pushing the markets today. It was just chewing up every single order, just chew. And that only lasts until they turn those machines off. That's not real buying. That's not true market, making coming in there, where it's a free market to trade in. That was just a churning of the machines, just to grind that up. So anyway, I do have tomorrow as a sell day based on that 2-period rate of change. Yet if we're above this 65.30, which I believe that was our high today, intraday as well. Our high 65.23. Hold on. Oh, no. I'm sorry. Yeah, that's what I have. So on my 2-period rate of change, if we get above 65.30, if we're above 65.30 up in here, then I'd expect that to flip back up pretty strong to the upside and kind of confirm that move. Anything below that 65.30, I would still be looking for some short opportunities on that. The 65,000 tick chart, I did want to. Oh no! Before we get to 65,000, let me show you the gap chart since I have it here. All right, so this is the gap chart or the intraday .D chart. You can see that today we kind of had a trending like situation happening here, where we just boom, just kept marching up. Did a couple of little pullbacks here. So this pink line I have is my Bollinger Band. That may be closer to your guys's some of your Keltner channels, but my Keltner channel is up here. So we stayed within the Keltner channel. We did kind of ride that upper Bollinger Band a little bit, but we just kind of marched away from that. Haven't even really touched that the mid Bollinger or mid Keltner channels here. So I have that as a high potential. Come back down here to 65.11 tomorrow. Matter of fact, at this very moment, we are trading at 65.10. Let's get over here. You can see here on our day, we are currently trading at 65.10 is the low, and then that's where we're at right now on that. So that's kind of interesting that we're already back down into the 65.10 zone. See if we open up below that or where we're going to open up tomorrow. It'll be interesting to see. All right, so let me pull over the 65,000 tick chart. All right. So on this, I have this kind of boxed off here where we came up here, we touched up here, and we touched again over here. So 2 points kind of creating a box. We have multiple points down below that kind of support a zone down here. That's also where I happen to have that pink horizontal line, that 73, the 6473 zone. So we kind of broke out to the upside of that a little bit today. So it'll be curious to see, and I should have caught this when we did this breakdown. We went back up in it. We did a false breakdown here, and then we moved right back up in it, just for this churn and burn today. So this actually, let's see, this is 65,000. Yep, that's 11 o'clock. This is close to 1,600. So we closed up here on the highs. Well, we've then since then been just kind of trailing off into Asia's open here, back at the top of this box. So it'd be curious to see if this is kind of a false breakout. Are we going to end up back down in here? Or was that price action today legit and we're going to push up? I'm keeping this all tempered with what I showed yesterday in the weekly of the SPY, that how September, predominantly September has a down bias. It does not mean every day, obviously, guys. And you saw in some of those charts, you may begin and end the month right about the same. But there, you saw there was a clear bias on that on a weekly basis on the September markets. So keeping that in mind, looking at these things here, and the fact that I have tomorrow's another sell day. All right. So careful if we're above today's highs, this 23, the 6523, if we're back above that, like I said, my next zone up is up in the 30s. Before that 2-period rate of change, I would expect to flip up in there. All right, last thing on the internals. Where did I put those? Oh, okay, good there. Okay, on the internals, this is interesting, guys. So you can see here on our price action here. Oh, hang on, let's get this down. I guess we'll go down much more without that. Okay. Nope. Okay. So you can see here on the price, we've gone up in this price here. However, we've also moved up in the VIX. So this is the VIX up here. This is the SPY down below. We're having a divergence in the price and VIX. Price is continuing up while the VIX started to move up. So we're starting to see that on a daily basis as of today. Well, we kind of saw it yesterday also. We saw this divergence here yesterday as price was making those new highs. So this is day 2 where we started seeing that divergence. That should hold a little bit more weight, and something to keep an eye on for sure, guys. So that's all I have there. I know I'm supporting kind of the short-sighted here. However, I cannot deny we are at all-time highs. Don't try to pick the tops. However, if we see something setting up, we see those opportunities, we see some weakness start coming in the markets. We want to be aware and ready to take advantage of that, not just ignorantly thinking, oh, this is just going to keep going up and up and up. And conversely, as I got spanked today on, conversely, I don't want to fight that either. If the market's saying, hey, we're going up, then don't fight that. So, all right, that's all I have for today, guys. Thank you again for everything today. A lot better communication in the room, even though I didn't personally feel like I partook in that. But hey, a lot better communication in the room today. And let's continue to help one another. Thank you guys for the encouragement. And we will get through this and we will be successful. All right. See you in the room tomorrow.